Yo, Crypto Bullseye here, bringing you your emergency midweek update. And I did promise you guys that I would bring you these emergency updates when I can get to the charts. When I can do them, I will do them for you. So make sure you guys hit that notification bell or you'll never be notified when these emergency updates occur. So this episode, should we sell in May and walk away? The famous saying, the institutional holiday, should we sell in May and walk away? I can't tell you guys what to do with your investments. I'm not your financial advisor, but one thing that I can do is show you exactly what metrics I'm looking at, what indicators I'm looking at, and what charts that I'm looking at for me to make a decision whether to do exactly that. So stay tuned right to the end, and we're going to go through these together. Right, okay, guys, we're going to start with the Bitcoin chart trading against USDT. And before we get into this, actually, the thumbnail's about sell in May and walk away. Why is that an actual thing? Is it retail that's selling in May and walking away? And I'll tell you, it's definitely not retail that's selling in May and walking away. It's institutions, it's big investors. And this goes back a lot further than you think, guys. It goes back to the old English aristocrats and the old English bankers that used to cash in their profits of the first few months of the year, during the horrible months of the year in the English weather, where it's raining, where it's horrible and cold. And they used to sell in May, go off on their holidays for the few months, take liquidity out of the market, and then come back during September. So that continues throughout the rest of the world as the financial markets progressed, as the financial markets grew, and it is still a thing now, sell in May and walk away. And before we get into the analysis, the resistance levels, the key areas that I want to show you guys on the Bitcoin chart, I just want to show you a couple of other times where sell in May and walk aways happen. You had the 2021 major bull run, major 2021 bull run, and this crash here, sell in May, walk away. More recently, 2022, did it happen again in 2022? It did. May, sell in May, walk away. Does it mean that this is definitely going to happen, guys? It definitely does not mean that it's going to happen. The markets are designed to wreck you. The market's designed to take liquidity from retail. They're designed to do this, guys. They're designed to mess with your minds. Doesn't mean that it's going to happen. It might happen. It might not happen. I'm asking you, are you prepared for each scenario? And I'm going to show you how I'm prepared for each scenario here, because we're at a key major resistance level. And this is a problem for me because I don't want to be on risk until we break this major resistance level. And funny enough, this major resistance level has something to do with the last Mays that I've just showed you, the 2021 and 2022. And I'll show you exactly why, because May 2022 created this resistance point where the market went sideways for a couple of weeks here, guys. And if you just pull that out, that's got to act as resistance going forward, and it certainly did. It's tested the bottom of the range, it's tested the mid-range, hasn't tested the top of the range. And if we go back to the 2021, you can see that these extreme wicks here acted as major support. These wicks acted as major support. What do they do going forward? They will act as major resistance if broken. There's a higher probability that they're going to act as major resistance. So if we just pull our area of interest up to where price action currently sits, you can see we've got double confluence here, guys. Double confluence. Another thing which is shown there's a high probability of a move to the downside is if we break this head and shoulders pattern, if we break the right shoulder of this head and shoulders pattern, there's over a 52% probability of this move playing out to the downside. And not only a 52% probability of it playing to the downside, there's a 52% probability of it reaching from the top of the head to the neckline, which would put us back into the 276-day major resistance range. Does it mean that we're going to close below there? Because what you can get is a spike and a wick up and still hold this level. So you can see it's decision time now at the moment. It's key decision time. We're going to look at a couple of other metrics and a couple of other indicators, and then you can make a decision for yourself. Have you applied the appropriate risk management? Have you protected yourself? Because I'm about 50-50 into the market at the moment. And what I want is Bitcoin to break this level and for this level to act as support before I see a continuation of this bullish momentum. Okay, so the next thing that I'm looking for, or looking at even, is the Bitcoin dominance. And Bitcoin dominance is currently sitting at 48.29% of the crypto market cap. That's nearly 50% of the whole crypto market cap. You add in Ethereum, you probably add an extra, in fact, you are adding about an extra 20% on top of that. So the whole of the altcoin market is currently sitting at around about 30% of the crypto market cap. Add everything together other than Bitcoin and Ethereum, that's sitting at about 30% of the total market cap. People are fearful overall. So we're in the midst of a bear market, don't forget that. And Bitcoin is designed to eat the liquidity out of the market cap because Bitcoin's the big daddy. It's the least risk asset in crypto. So people go into Bitcoin and more recently into Ethereum. So we've got Bitcoin sitting at 48.29, and we've been in this range for some time now. In fact, we'll measure this range and see how long we've been in here for. So 731 days, nearly 2 years we've been in this range. So there's no indication that we're going to break to the upside. However, we are at a decisive point that's going to tell us whether we are or not. So if this pulls to the downside, there's a higher probability you're going to get your alt season once we break this low. If we break to the upside, you can kiss your alt season goodbye if we hold above that and start creating higher lows. So if Bitcoin dominance, or if Bitcoin starts eating away at the dominance, it'll start eating away at Ethereum, it'll start eating away at the rest of the altcoins, and it won't give them a chance to rally. So that's the other metric that we can look at. If Bitcoin does drop to the upside, that means that there's liquidity coming out of the market, people are more fearful, and they'll go into assets which indicate where you can go, where there's fear in the world, when there's pandemics going on, when there's wars going on, when there's high inflation going on, people go into gold. This is the gold spot chart, and you can see that it's nearly breaking all-time highs. So it's nearly breaking all-time highs, indicating fear in the world. So let's keep an eye on the Bitcoin, on the gold chart, because they're all at key resistance levels, or they're all at key support levels. And it depends on which one starts to break that resistance level or support level to give you an indicator as to which one's going to run first. So that's what we're looking for, and that's what we're looking at. And you can see with the USDT dominance, the US dollar tether dominance, it's currently sitting at 7.37% of the crypto market cap, and it's creating a little bit of an inverse head and shoulders in itself here. If we break this neckline, there's going to be a 52% probability that we're going to get a move that's going to measure from the neckline to the head, the inverse head and shoulders, which will push us up to this major resistance level. What happens if we get pushed up to that major resistance level? People are fearful, people are buying US dollar tether. They're selling their altcoins, they're selling some of their Bitcoin, selling their Ethereum, and going into stable coins. So keep an eye on that. If we break the neckline of that, that's another indication of which way the market's going to run. And finally, the DXY, strength in the dollar. This is the dollar trading against a bag of currencies, the pound, the Canadian dollar, the euro, and it shows strength in the dollar. And you can see we're at another major support level. What's going to happen? Are we going to bounce from this? Because it certainly tested support once, twice, 3, 4, 5 times. Is it going to break to the downside, or is it going to make another move to the upside? Because if it makes a move to the upside, people are fearful going back into the dollar. So you can see how we get clues from this, guys. We can get clues from what the markets are telling us. And at these support and resistance levels is key decision time for you. Have you protected your portfolio? Because ultimately, as an example, we've got Bitcoin back here. Ultimately, if you had protected yourself, if you protected yourself and Bitcoin went the opposite way to the way that you predicted, it made a move to the upside, you can buy support, and it's pretty much at the same level, guys. You can buy support. It's always going to come back down. A major, major, major resistance level is always going to come back down and test support at some point. So rather than buying resistance, does it make more sense buying support? And again, none of this is financial advice. I just wanted to bring this emergency update to you guys. So again, don't forget, hit that notification bell, because you won't be notified when these emergency updates occur. And if you did like the video, give it a thumbs up and share it with your friends. Subscribe to the channel. Thank you. And I'll see you guys in the next one.